Today, we will be talking about special mention accounts or SMA. We will discuss the classification of SMA versus NPA, SMA and COVID related schemes, SMA and its impact on various credit reports, SMA and moratorium granted by RBI. An asset is termed as standard and regular as long as the principal and interest are paid in time. If there is a delay in repayment for even one day, it still remains standard, but we call it SMA or special mention account. First, let us understand when an account is marked as SMA and its classification. The rules for marking SMA are different for term loan and working capital account. If we follow this RBI circular, we can see that in case of term loan, if the principal or interest payment or any other amount wholly or partly overdue for 1 day to 30 days, it's an SMA 0, 31 days to 60 days, SMA 1, and 61 days to 90 days, it's in SMA 2. Now, what do you mean by any other amount? It can be any other charges like insurance, charges for issuing notices, charges on valuation, legal, or any other expenditure that the customer has to bear. So, even if the customer has repaid the principal and interest, or let's say EMI, but not paid the charges which were debited in the account has every possibility to move into SMA. Also, partial payment of EMI amount will also make the account SMA. However, the case of revolving cash credit facilities is little different. Here, if the outstanding balance remains continuously in excess of sanctioned limit or drawing power for a period of 31 days to 60, it goes to SMA 1. And between 61 days to 90 days, it's called SMA 2. So basically, there is no SMA 0 in case of CC limits. CC limits will be considered in default only if the outstanding balance is overdrawn for more than 30 days. Let's say you have a CC limit of 1 lakh with 12% ROI and the limit is fully drawn or utilized. So when the interest is charged on the account on the last day and subsequently the limit gets overdrawn, unlike term loan, it does not move into SMA immediately. It will become SMA only if the interest is not paid even in the next month and the account remains overdrawn for 30 days. So there is a cushion of 30 days in case of CC limits. Now what will happen in case of non-renewal? Even if the utilized amount of CC or OD is well below 1 lakh, but the limit has expired, the account will still be classified as SMA 1 on 31st day of limit expiry. What if you have given a temporary overdraft and the limit expired? It will get the same treatment as of expired limit and will be marked as SMA 1 on 31st day if the account is not regularized within 30 days. Now, what might have provoked RBI to frame such a biased rule in favor of cash credit account? You see, keeping the other factors like charges and ROI constant for a month, a customer who has taken a term loan definitely has a fair amount of idea how much he has to pay by the end of the month. Generally, we are providing a repayment schedule in the sanction letter. But in case of cash credit, no one really knows how much interest shall be charged at the month end. It depends upon the utilization and balance outstanding on each day. Now, if we suddenly classify the account as SMA on 1st of every month, then I think the majority portfolio of all the banks will appear as stressed. Perhaps that's the reason for some leniency in CC accounts. While working in branch, managing SMA is perhaps more important than managing NPA. Why? Because still there is hope or chance to keep these assets regular and performing by recovering a small amount. Let me explain. Let's say you have a term loan facility of 1 lakhs at 12% ROI and the monthly EMI is around 1000. Now the customer could not pay that amount for the month of November. It became overdue from 1st December and the account became SMA 0. Somehow the customer was again not able to pay the amount in December as well. So the account moved to SMA 1. So how much will be the overdue amount now? Rupees 2000 plus some penal interest on the overdue amount. What if the customer pays 1000 at this point of time? The account will be pushed back to SMA 0. Similarly, if the account was in SMA 2 and the customer pays some portion of the overdue amount, the account is pushed to SMA 0 or SMA 1 or maybe at the starting point of SMA 2 depending on the amount you have recovered. If this is a term loan on EMI basis whose repayment has started, then your focus should be on the EMI amount. If it is an OD, your focus is on the interest. What if you are dealing with a term loan which is in moratorium but interest is to be served as and when due? Then also your focus should be on the interest. What if it's a housing loan where moratorium of principal and interest both are available? Then you need not worry at all. The asset continues to remain regular as long as repayment does not start. You may have noticed that there are many accounts in your branch which are SMA since you have joined the branch and probably will remain as SMA till your next transfer. The best part of SMA is that the accounts can continue to make their movements to and fro in the SMA categories if you are able to recover one installment or maybe 15 days installment and so on. Your SMA report reflects something called critical amount which is much lesser than the total overdue. And generally, we all strive to recover that in order to save the account from NPA. But it is always advisable to ask for the entire overdue amount when you are on a recovery mission. Or perhaps you are sending a notice to your borrower. Because if you ask for 1000, they will always get back with 300 only. But once a SMA slips to NPA, it's a different ball game. Why? Because we know one account NPA means all account NPA. And the other accounts need not be in your branch only. It could be in any other branch of your bank. So suppose you have a customer whose vehicle loan of 3 lakhs is in SMA 2 with an EMI overdue of 3000 and a housing loan of 10 lakhs which is a regular account. The moment this vehicle loan which was in SMA 2 slips to NPA, your branch NPA figure will suddenly shoot up by 13 lakhs. Because even the regular home loan account will be considered as NPA just for an overdue of 3000 in the vehicle loan account. In technical terms, it is deemed to be NPA. If the housing loan account was in SMA 1, it would create further complexity as now you have to collect the entire overdue amount not only on the vehicle loan but on the housing loan as well. Now you can imagine the significance of preventing an account from slipping to NPA from SMA. Customers never really bothered about SMA. In fact, They didn't really knew that something of that sort even exists until recently when all the COVID related schemes were introduced with SMAs as riders. In terms of GECL 1, irregularity in the account up to SMA 2 can be tolerated. But in case of GECL 2, this becomes stringent, that is SMA 1. In case you are working on resolution framework of personal loan or MSME, at worst you can accept SMA 0 accounts. In case of companies whose exposure is 5 crores and above, RBI has mandated submission of CRILC report every week on Friday or on the preceding date if Friday is a holiday for the accounts which are in SMA. One more important aspect of SMA is that it affects the CIBIL score of an individual and company too. Borrowers' loan data are updated in the credit information company, that is CIBIL,